Welcome to Stock Shotz. Today is Tuesday, April the 7th, 2009. We're so pleased to have as our guest today Mr. Bob Lang of BigTrends.com. I had the opportunity to visit with Bob on a variety of topics, ranging from how he sees the political environment impacting the market to what he looks for when he's setting up a trade. Please be sure and visit our sponsor, DTI, at www.dtitrader.com, or you can sign up for the free Wednesday on the web through our website at www.stockshotz.tv. Listen in now as I interview Mr. Bob Lang.
Hey, Bob, we're so pleased to have you with us on Stock Shotz tonight.
Nice to be with you, James.
Bob, this is the first time you've been our guest, so would you tell our listeners a little bit about yourself and what you do at Big Trends?
Certainly, I'd be happy to do so, James. I run subscription services for options traders. I run the two flagship services for BigTrends.com. One is called the Grand Slam Options Service, which we trade all the time, 365 days a year, or as many days as the markets are open. And I run another service called Extreme Options, which we trade primarily during the expiration week, which is only about 1 week of trading, so you know this moves kind of quick, and you got to be fast on the draw in getting in and out. We mostly only buy options and sell them when we're ready to take profits, and we just keep it simple and basic, and have done fairly well for the last several years.
Well, now, Bob, sometimes or at least the perception has been lately that the options market has gotten much tougher as the volatility has come in because the premiums are obviously higher. Has that precluded y'all from making money in the fashion that you've been accustomed to over the past 5 years?
That's interesting you should mention that, James. Actually, you know what? As an options trader, I like volatility. I want to see the increase in volatility because the only way that I can make money when buying and then subsequently selling options is I need movement. I need stock prices to move. I want them to move up. I want them to move down. So, frankly, I like the volatility. Give me, to paraphrase one of our founding fathers, give me volatility or give me death. I want to see this market move up and down. I want to see stocks moving up, moving down, and this gives me a chance to ride trends up and down, not necessarily just in a choppy motion, but still being able to ride trends up and down. We saw that huge, massive increase in volatility coming out starting in early September of last year, and I got on the ride of puts and managed to make a killing on the downside of a lot of these stocks. Of course, that rise in volatility was an indicator that stock prices were going to be heading down, but they also went back up, as we saw in late November. So, to answer your question, yeah, I really like the volatility. I like the extremes in price action.
So the increased premium doesn't bother you nearly as much as a stale market, then.
Absolutely right. That's exactly right. And as a comparison, if you recall, just prior to the early September period, we had a volatility index that was sitting at around the low 20s. I mean, it almost seems like an eternity ago when we saw the volatility that low, because we're right around the low 40s right now. In a relatively speaking, that's a high number, but from what we've had recently, where the VIX hit up to in the low 80s, high 80s even, this is a low number relative to what we're used to. But in the bigger scheme of things, this is still a highly volatile market, and there's still a lot of fear in there. But if you recall back in last summer, I wasn't making any money at all. And why is that? Because there was no volatility in the market. Option prices were low, were cheap, and I couldn't make a whole heck of a lot of headway over the summertime. It's not until we got that ramp up in volatility where I really started to make some money.
Well, Bob, let me ask you this. We have had a lot of argument on our show as to whether or not we've hit the bottom, and I really got tired of the term bottoming process because you've had somebody in the mainstream media calling the bottoming process for probably 30%, But are you buying into the fact that we've hit the bottom and we've turned, or do you think this was just another bear market rally?
James, I'm going to answer that question in two ways. First of all, I'm not a believer in tops or bottoms. I think anybody who's out there trying to find tops or bottoms, it's a loser's game. and it's I want to find a trend. Give me a trend. I want to ride that trend until not necessarily till it ends, but until I'm happy with the profits that I have. So I don't search for tops. I don't search for bottoms. I let the next guy do that. But the fact is, could we have made a bottom a few weeks ago? I know some people out in the media had proclaimed that this is the bottom and this is the end of the bear market. I'm not a particular believer in that yet, and I'll tell you why. Is because there is no such thing as a V bottom, and a V-shaped bottom is one where we have a big plunge and we bounce off that plunge and ride back up. It looks like the letter V from the alphabet. I'm more of a believer of a so-called a W, and which means that we will bounce off of that sharp bottom, but we will come back and test that, and that's what we had back in 2002 and 2003. If you look back on the charts, on the daily or weekly charts, you will see that we had a low in October of 2002. We bounced, and we tested that low again in 2003, about 4 or 5 months later. And it was from that point where the market launched into a phenomenal run up until October of 2007. So this is not this could be a bottom. I'm not sure. I will tell you the next time we come back down in this area, which hopefully will happen in the next 2 to 3 months, and we come back and test this level, and hopefully it holds. If it doesn't hold, then we're probably going to come back down, but if it does hold, then I'm a buyer.
Well, one of the things that we explored early on in the show, of course, we had Mr. Jim Rogers as a guest, and he was very upset at some of the actions that the Fed has taken. And we've kind of explored, will the financial system cause us another leg down? Are you factoring in any instability in the financial system into any of your trades, or do you think we're kind of past those concerns?
Well, one would have to believe and hope, and of course, hope is never a strategy when it comes to investing, but one would have to hope that the powers that be, meaning Chairman Bernanke and Federal Treasury Secretary Geithner, know what they're doing and know what they're getting into and know the risks that are involved in the massive amounts of money that are printed to take care of some of the problems that are facing us right now. I just don't believe that we can become another banana republic out there. And history shows that printing your way out of trouble has never been a solution. It's never been a solution for any country out there. So I'm really we're really riding the pine of high risk right now. And if this fails, we're facing a lot of trouble here, because we have a mounting amount of debt and just continue to print money. We continue to sell treasuries, and there's going to come a day, James, when the foreigners just say, "Look, enough! I'm not going to buy any more from you. Who are you going to sell it to?"
I agree, and Bob, I think we're getting closer to that day than a lot of people would like to admit, because things are so dire. I think we don't want to think about those consequences, but I think we're getting closer to that reality by the day.
For the rest of this great interview, visit our website, www.stockshotz.tv. That's www.stockshotz.tv. Thank you for listening.